Have you ever wondered why you do everything right and the money still keeps disappearing? You show up to work. You don't overspend. You don't live a flashy lifestyle. You're just trying to be a responsible man. So why does every month still feel like a quiet battle? You get paid. You pay the bills. You take care of your family, and then, before you even catch your breath, your account is back to that familiar number. That tight feeling in your chest every time you open your banking app. It's not because you're weak, and it's not because you're bad with money. When more than 1/3 of Americans can't cover a $400 emergency, when total household debt has passed $18 trillion, this is no longer a personal problem. This is a systemic one. And if you've ever thought, maybe I'm doing something wrong, stay until the end of this video, so you can understand why money always feels tight and the real rules operating behind every paycheck you earn. There's a very common misunderstanding that most of us carry from childhood into adulthood. We grow up believing that having money means being wealthy. But in reality, those are two very different things. The money you hold in your hands or the numbers you see in your bank account is not wealth. It's a promise. A promise that when you need housing, food, gas, or healthcare, the system will accept those numbers in exchange for the things you need to live. Modern money, especially the US dollar, has no intrinsic value. It's not backed by gold. It doesn't represent any specific physical asset. It works only because we all agree that it works. And this is a critical point. When you receive your paycheck at the end of the month, you're not receiving wealth. You're receiving a claim on future wealth. It's like a ticket. That ticket only has value as long as the theater stays open and everyone agrees to let you in. If tomorrow, for any reason, that trust begins to break down, money doesn't slowly fade away. It evaporates. That's why some people earn a lot of money yet still feel constantly uneasy. They have income, but they don't feel secure. Because deep down, they understand something important. Their money depends on the system, not on them. And this system is built to keep money moving, never sitting still for very long in the hands of an average person. You're paid to keep playing the game, work, consume, repay debt, then work some more. Money enters your account, then flows right back out through rent, insurance, bills, interest, and those small but constant expenses. If you've ever wondered why you earn money consistently but never feel wealthy, this is the first answer. Money is not designed to make you rich. It's designed to keep the system running smoothly. Real wealth isn't about how much money you make this month. It's about this question. If you stopped working tomorrow, would your life collapse immediately? And that's when we need to look deeper at the next question. If money isn't wealth, then where does money actually come from? To truly understand this system, you need to know a truth that very few people are ever taught. Most of the money in the economy isn't printed. It's created through debt. When you deposit money into a bank, you probably assume the bank simply keeps it safe for you. But that's not what actually happens. Banks keep only a small fraction of deposits. The rest is loaned out. This is called fractional reserve banking. The important part isn't that banks lend money. It's how money is created when they do. When a bank issues a mortgage, it doesn't pull that money from a giant vault somewhere. It creates new money by crediting a number to the borrower's account. That money exists only because someone now owes it. Every dollar you spend in daily life exists in part because someone, somewhere, is paying interest on a loan. And if that loan defaults, that money effectively disappears from the system. This is the part that makes many people uncomfortable the first time they hear it. Because it means this. The system requires debt to exist. Not by accident, not because of a mistake, but by design. Every loan comes with interest. If a bank creates $1 million in loans at 5% interest, the system now requires $1,050,000 to be paid back. But that extra $50,000 isn't created at the same time. It can only appear when new loans are created. New debt pays old debt. And the cycle continues. That's why total US household debt has climbed past $18 trillion and continues to rise. This system doesn't encourage you to pay off debt quickly. It encourages you to stay in debt for as long as possible, as long as you can keep paying interest. And once you start seeing money this way, you understand why the feeling of not having enough never fully goes away. Not because you're not doing enough, but because you're living inside a system that is sustained by that very sense of scarcity. Why the system wants you to buy now and pay later. If money is created through debt, then the next question is obvious. Why does the system work so hard to make borrowing feel normal? The answer lies in a simple truth that's rarely said out loud. People without debt are hard to control. People in debt are very predictable. Look at how we're encouraged to spend. You don't need to wait until you can afford a house, you just need to be approved. You don't need the cash to buy a car, you just need a monthly payment. You don't need to save for a new phone, your credit card will take care of it. The system doesn't teach you to delay consumption, it teaches you to consume now and pay later. At its core, debt is time travel for comfort. You get to live like someone wealthier today in exchange for years of future labor. And during that time, you become very compliant. Someone carrying debt is less likely to quit a job they hate, less likely to say no to a boss, less likely to take risks, less likely to start over. Not because they're weak, but because they don't have a safety net. This system doesn't need you to be poor. It needs you comfortable enough not to rebel, but pressured enough to keep working. That's the ideal balance. And to keep you there, the system uses psychology. Advertising doesn't sell products, it sells status. You don't buy that car because you need transportation. You buy it because it makes you feel like you've finally made it. You don't move to a bigger apartment because the old one is unlivable. You move because someone online seems to be living better than you. Over time, consumption stops being about need and becomes a way to soothe yourself. And once spending is tied to emotion, debt becomes normal. More dangerously, it becomes invisible. Just a few $100s a month, just one small installment, just something you'll deal with later. Until one day you look up and realize that most of your income has already been promised to the future. Not because you're greedy, not because you lack discipline, but because you're living inside a system designed to make borrowing the default way of life. And that's when we have to ask the harder question. If debt is the same tool, why does it trap some people and make others rich? The same debt, so why do the wealthy use it differently? At this point, a lot of people start thinking, if debt is so dangerous, why do wealthy people borrow so much and still get richer over time? The answer comes down to the purpose of the debt. The system doesn't label debt as good or bad. It only responds to how you use it. When an average worker borrows money, it's usually to consume, borrowing to buy a car for work, using credit cards for daily spending, borrowing to feel more comfortable right now. And what happens? Debt goes up, but assets don't. The car loses value every year, the phone becomes outdated in a few years, and past experiences can't be sold back. Meanwhile, people who understand the system borrow with a very different goal. They borrow to buy assets that generate cash flow, rental properties, businesses, stocks, infrastructure. Assets that can, over time, pay for the debt themselves. When they borrow $1, they don't ask, "Can I afford the payment this month?" They ask, "Will this asset generate more than the interest I'm paying?" That question makes all the difference. It's the same tool debt, but one side uses consumptive debt and the other uses leveraged debt. And there's another critical detail that often gets overlooked. Workers pay interest with after-tax dollars. Wealthy individuals often pay interest with pre-tax income or receive tax deductions on that interest. It's the same interest payment, but their real cost is lower. While you work more hours to service your debt, their assets work on their behalf. That's why compound interest becomes your enemy and their ally. Compound interest inflates consumer debt, but it also accelerates income-producing assets. The issue isn't that you don't understand math, it's that you're not placed in a position where compound interest can work for you. The system ensures that most people stay busy servicing debt long enough that they never accumulate the initial capital they need. And without capital, all investment advice sounds like a luxury. Not because you lack intelligence, but because you're playing at a different table. And that brings us to the most important question of all. If you can't escape the system, is there a way to play differently at least enough to avoid being crushed by it? You can't escape the system, but you can play it differently by this point. You've probably realized an uncomfortable truth. You can't completely escape the monetary system, You still need money to live. You still need banks. You still need to work. But that doesn't mean you have to play the way the system wants you to play. The difference between people who are constantly stressed about money and those who remain relatively calm isn't intelligence. It's a defensive strategy. People who understand the system don't try to beat it. They simply try not to get crushed by it. The first and most important layer of defense is a safety buffer. Without emergency savings, every financial decision becomes forced. You don't choose a job because it fits you. You choose it because you need the paycheck. You don't say no to a bad expense. You're afraid that if something goes wrong, you won't be able to handle it. That's why an emergency fund, even just $500 or $1,000, is so powerful. Not because of the amount, but because of choice. The second layer of defense is recognizing bad debt. The system wants you to believe, as long as I can make the monthly payment, I'm fine. But every debt that doesn't create value is a piece of your future that's already been pledged away. Credit cards are the clearest example. High interest rates aren't an accident. They're how the system charges you for impatience. The third layer of defense is recognizing emotional spending. Many expenses don't come from real needs, but from exhaustion, comparison, or the feeling of falling behind. The system wins the most when you buy something to feel better for a moment, then pay for it for months afterward. The final and foundational layer of defense is understanding money itself, not to get rich quickly, but to stop blaming yourself. When you understand the rules of the game, you start looking at decisions differently. Not more perfectly, but more clearly. You stop asking, what did I do wrong? And you start asking, is this decision serving me or is it only serving the system? And sometimes, simply changing the question is enough to change the direction of an entire life. If you think back to the beginning of this video, the most important thing probably isn't how many financial concepts you learned. It's something else, a different feeling, a lighter one. Because once you understand how money actually works, you start to realize that a lot of the pressure you've been carrying for years isn't entirely your fault. You're not inadequate because you're not rich yet. You're not a failure because you still worry about money every month. You're living inside a system designed to keep money scarce for people who have to sell their time to survive. Understanding that doesn't free you from the system overnight, but it gives you something incredibly important: choice. You can choose not to chase things just to prove that you're doing fine. You can choose to be more careful with debt. You can choose to build a small safety net instead of pretending to be strong when you're actually fragile. You may never become a billionaire, but you can build a life where money serves you instead of controlling you. And before we end, I want to ask you one question, not to answer for me, but to answer for yourself. Now that you understand the system, will your next financial decision be a reflex or a conscious choice? If this video changed the way you see money, leave a comment and share what you're thinking. There's no right or wrong answer. Just be honest. Because sometimes simply asking a different question is how you begin playing a completely different game.